Today is Thursday, June the 5th, 2025. Bitcoin is hovering just above 102,000. But the real fireworks, Circle's explosive IPO. Meanwhile, macroeconomic tremors are shaking global markets. Let's unpack the biggest stories in crypto and finance. Today, Circle, the issuer behind USDC, made a sensational debut on the New York Stock Exchange today. Trading under the ticker symbol CRCL, the stock surged more than 180% from its $31 IPO price. The enthusiasm was palpable. Wall Street cheered what many are calling a watershed moment for crypto infrastructure. Yet not all crypto assets shared in the celebration. Bitcoin fell slightly on the news. Analysts suggest that after years of volatility, crypto investors are now highly reactive, especially to sudden bullish spikes in correlated assets. And with Bitcoin still digesting its April halving, many traders are taking profits, not chasing pumps. Despite today's pullback, Bitcoin's 50-day moving average has hit an all-time high. That would typically signal strength. But here's the catch. Price momentum is slowing. The gap between BTC's spot price and its moving average is narrowing. This suggests buyers are less aggressive and consolidation may be ahead. Yet on-chain activity tells a different story. Transaction volume, new wallet creation, and hash rate, all on the rise. This divergence suggests long-term holders and miners are growing increasingly active, even as speculators cool off. In political crypto news, Trump Media and Technology Group, parent of Truth Social, has filed for a Bitcoin ETF. The filing, dubbed the Truth Social Bitcoin ETF, aims to track BTC directly. If approved, it would mark the first politically affiliated ETF of its kind. But the bigger bombshell? The US government's strategic Bitcoin reserve. Confirmed holdings now exceed 200,000 BTC, valued at over $20 billion. This reserve, originally comprised of seized funds, has now been formalized into a strategic asset class, and it positions the US as one of the largest sovereign holders of Bitcoin on the planet. Shifting to Europe, the European Central Bank today announced a 25 basis point rate cut. This brings the Eurozone's deposit rate to 2%, its first cut since inflation peaked in 2023. ECB President Christine Lagarde cited subdued inflation and slowing growth across Germany, France, and Italy as key reasons. The rate cut comes amid a weakening construction sector and softening consumer spending. Markets reacted cautiously as investors debated whether the move was proactive or reactive. Bond yields across Europe fell, while the euro lost ground against the dollar. In the United States, fresh data showed jobless claims rising to an 8-month high. Weekly claims topped 235,000, while ADP reported a significant slowdown in private sector hiring. This suggests the labor market, long seen as resilient, is finally starting to feel the weight of high interest rates. Wall Street's rally paused. The S&P 500 and Nasdaq both ticked lower. Traders now expect the Fed to hold off on further hikes and possibly pivot by Q3. Treasuries rose, and futures markets began pricing in 2 rate cuts before year-end. Across global markets, sentiment remains mixed. Asian stocks climbed overnight on hopes the Fed might ease policy soon, but volatility remains elevated. Currency markets are also stirring. The Japanese yen weakened further, approaching the 160 mark against the dollar, raising fears of fresh intervention from Tokyo. In commodities, oil prices dropped on demand concerns, while gold held steady near 2,350 as investors sought safety amid uncertainty. Meanwhile, institutional investors are rebalancing portfolios. With concerns mounting about US fiscal deficits and global stagflation risks, many funds are trimming equity exposure. Crypto gold, and defensive sectors are gaining attention. Bitcoin, in particular, is once again being viewed as a potential hedge, not just against inflation, but against geopolitical and monetary instability. So where does all this leave us? On one hand, crypto infrastructure is growing up. Circle's IPO is a testament to that. On the other, the macroeconomic backdrop is fragile. Central banks are recalibrating. Investors are cautious. The next moves from the Fed, the ECB, and the White House could reshape markets dramatically. As we look to tomorrow's non-farm payrolls report and next week's CPI data, volatility is likely to remain elevated. Whether Bitcoin can decouple from macro jitters or simply ride the wave remains to be seen. This has been your June 5th crypto and macro market update. Stay tuned, stay informed, and remember, this is just the beginning.